Oh man, is now the time to exit crypto with Bitcoin knocking on the door of 70,000. Is this time to take some profits and wait for a big market pullback to dial back in our positions? In this video, I'm going to break down exactly my game plan and what I think, because this is one of the most common questions I'm getting right now. A lot of people's portfolios are in the green. I mean, you'd have to be doing something quite fundamentally wrong to not be in the green right now across your portfolios. And now the question is, should you be trimming and waiting for a big Bitcoin pullback? On Friday, we saw quite a painful dump here on crypto, down 2%. Should we be panicked by that, or should we be locked and loaded for another big move? I'm going to break that down here on a Sunday and a lot more. If you appreciate these weekend updates, smash up the likes. Do not forget to subscribe. If you want to trade with me in our community, jarscrypto.com is the first link in the description to our Telegram group. Make sure you're in there. So as you can see, guys, Bitcoin here is consolidating, right? You can see clear resistance at this yellow line of 71,700, and we need to break this out, right? If we want to head towards 80,000, 90,000 and beyond, we need to be able to break out of this structure, which, let's face it, we got rejected here twice, thrice, 4, and now 5 times, right? This is starting to become a little bit of a concern for us that we failed to make that higher high. This previous peak in March continues to be an all-time high, and we've not managed to wick above it to create a higher high. So when you then look at that in terms of the structure, one of the natural concerns here is, could we just be creating a double top pattern, right? Is that a touch, come down, a touch, come down, to create a big reversal to the downside to start heading back to some of those levels such as 50,000, right? Could that be the case? And so if that is the case, should we really be starting to take some profits here and waiting for a pullback down to 50? That's what we need to talk about. Now, I'm going to share my view. My view is no. My personal view on this situation is I'm not going to try time this market. It is not worth me jumping in the market, jumping out of the market, trying to time it to only then miss a really powerful move up into price discovery. Because if I jump up to the weekly chart, that's exactly what you're getting. Once you clear this level, you are in clear skies above, right? Bitcoin needs to go set its price. So for me to try just jump out of the market to get some cheap Bitcoin, that's personally not my investment strategy. Now, I know there are some people out there that like to do that, but for me, that is not my strategy. I like to buy cheap and I wait and I DCA. So my main focus in these types of markets is figuring out how to get cash, trading in the market, doing an extra side hustle, whatever you guys are doing. People don't want to talk about this in crypto, but the reality is you need cash to then DCA the dip. Because if Bitcoin fell right now as I'm making this video, down towards 45,000, how many of you honestly can say, watching this video here, that you've got enough cash to meaningfully buy the dip? Because ultimately that's what it's about, right? Can you actually take advantage of a dip if it came? So when we now look at this here on the weekly chart and we take a look at where we're at, yes, I'm a little bit concerned by this double top pattern we could be forming. 1, down, 2, and then come back down. But I'm just getting ready. If we want to come down here and hit the EMA ribbon at 60,000, that is where I'm going to start nibbling. I'm not going to nibble before then. I'm going to nibble if we come down to 60,000. And the lower we get into this EMA ribbon, let's say we get down to 55,000, I'm buying a hell of a lot more. If we go even all the way down to the bottom of the weekly EMA ribbon, down to 47, those will be some amazing bargains where I'll be looking to really add the dip down there. So 60,000 down towards that 55, and any lower we get is where I'm nibbling. Other than that, I'm being patient. I just want to stack some cash to the sidelines. I want kind of 10 to 12% of my portfolio in cash so that I feel powerful, right? So I feel ready that when those dips occur, I can meaningfully make the most of them. Instead, what other people try doing is they take their portfolio, let's say they've got a £10,000 portfolio and they're in the market. And then they're like, oh, let me sell everything and get out of the market and wait for Bitcoin to fall to 50. And it goes to 75, and they're like, what do I do? And then it goes to 80, and they're like, it's all right, it's going to come back down 85. And they're like, no, it's going to come down 90. And you miss the move on the market. And I'm certainly not going to miss this move when you can clearly see, like I just demonstrated, Bitcoin is knocking at the door of resistance. It wants to go into price discovery up here, and for me, it's a matter of time. So yes, the Bitcoin bulls may need some cooling off. It may need to come back down to that EMA ribbon before bouncing. But I'm willing to wait. I'm willing to wait that out with my portfolio locked and loaded and not trying to mess that up. Now, of course, one of the reasons markets were getting spooked on Friday was the non-farm payrolls, right? Markets meaningfully got worried that jobs figures were too high. Now, if you look at some of the details For example, the unemployment rate actually went up a little bit, which is really, really good. And if you look at some of the jobs being created, they were in certain sectors. Also, some of these figures always get revised down as well. So for us right now, I wouldn't say that's a reason to panic. I mean, as long as inflation and jobs start trending in the right direction, we will get that rate cut. I think it's important to remember the Eurozone, the ECB has already cut. We saw Canada already cut. We're starting to see central banks going, hang on, enough is enough. We've really tightened the noose on these markets and we need to start letting go. The other thing which I explained in my previous video is even if the Fed don't want to cut, do you know what that actually means? It means the economy is good, that's why. So either way, we're kind of in a really good situation here. Either inflation comes meaningfully down and they start cutting, or we're doing pretty well, jobs are remaining good, fine, the economy is doing well, earnings are coming positively from companies, we're getting GDP growth, in which case long-term we're good as well. I think that's the important thing. We've managed to avert a hard landing. So when we look at this in terms of what are the worries that are ahead, I don't see many. Yeah, we just need to look towards now, when are we going to get that rate cut? And yes, the market's not pricing it in at the next FOMC meeting, right, which is on June the 12th this week. We will be covering it on this channel, so make sure you're subscribed with the notification bell on. We're not expecting it. We're not expecting a rate cut here this week on Wednesday. But markets at some point will. If you go down, June, they've not priced it in. Go down to September, boom, that's where they priced it in. Now, whether it happens in September, whether it happens in November, or even whether it happens in December, we're getting a rate cut soon. That's a big deal. That is a fundamental market pivot. That is where the Fed goes from tightening the economy that they've been doing for very, very long in a very, very aggressive manner to now saying, hang on, we're going to start loosening that. And I think people are underestimating what that means for crypto. Because what that basically means in layman's terms is the move we've seen here on crypto from where we were at 15,500 up towards close to all-time highs at 70,000. 70,000 has happened in the midst of high rate environment. So can you imagine what happens when they start loosening? You've got the Bitcoin spot ETF bringing in a streak of inflows. I think it's 18 days of inflows in a row. You're seeing the demand for Bitcoin climb. You're seeing inflation start to come down. People want to start taking risks. They want to put their risk in market. People want to make money right now, whether it's in real estate, whether it's in watches, whether it's in stocks, whether it's in crypto and altcoins. People in the mood where they want to make money right now, we're risk on. And so as long as we can keep the dollar index moving to the downside here substantially, like this arrow I've shown you here on this weekly chart, that's going to be good. And we've created a double top on the dollar index already. So that's a good sign as well. So to answer the question, am I exiting crypto right now? Absolutely not, right? I'm waiting for pullbacks. I'm waiting to buy the dip. I'm making sure I've got enough cash on the sidelines. So I'm not just sitting there going, oh, I wish I bought the dip if Bitcoin does fall lower. But at the same time, I'm ready for a move to the upside. Keeping it simple, keeping it pragmatic, that's the way I like to play the markets. Some people say, oh, I see one of these things in the comments, oh, you always say it's going to go up or down. Yeah, because it's going to go up or down. And my job is to be prepared for both. Somebody who just goes, hey, it's going to go up. Of course it's going to go up. They're maverick. I don't know why you're listening to these moon boys, right? You actually want to invest. You have a plan for if it goes up, and you have a plan for if it goes down, and even a plan for if it goes sideways, and you execute on that plan methodically. Hopefully you appreciate these updates. If you appreciate this type of content, smash up the likes. Do not forget to subscribe. Thanks for watching, and I'll see you in the next one.